Hey everyone, I just finished looking at the real estate market trends for Southern California. So I took the data from Los Angeles County, San Bernardino County, Riverside County, and Orange County, and I'd like to give you an update. So let's start with prices. The median price in all four counties has been dropping for about 5 months, little by little, and we're getting pretty close to last year's levels. So Los Angeles is pretty well flat for the year, and the rest of the counties are up a little bit. In terms of inventory, the number of homes for sale dropped a little bit last month, and it's still definitely way down compared to like 3 years ago. So pre-pandemic levels had about twice as many houses available. So all this suggests to me that we're not really headed for a crash, at least not yet. And there are some other things that I think suggest that as well, which we'll get into. In terms of how much time homes are sitting on market, in some cases it's about double what it was at this time last year. So the range right now is between 21 days and 26 days. That's the median. And remember, the median is the one that's right in the middle. So it means that half of them sold faster and half of them took longer. Now that's much slower than it was last year. At this time last year, the range was 8 to 13 days. So that tells you that you should just plan for a little more time on market if you're selling. If you're a buyer, then the time when you know that something is overpriced could be extended a little bit. Last year, it was like if it was on market for 10 days. That was very clearly too long. I think around now, probably it's closer to 14 or 15 days, and a lot of sellers are just taking a while to be able to figure out that they've overpriced. And so that's why homes are sitting a little bit longer. In terms of supply and demand, it's a really interesting time for that. Buyers still substantially outnumber sellers in most of the Southern California markets, but the intensity of the seller advantage is cooling. So months of inventory is how we measure the relative supply and demand in the real estate market. Anything below 5 months of available inventory is considered a seller's market. And anything above 6 would be considered a buyer's market, where sellers outnumber buyers. So right now, months of inventory ranges between 2.1 months and 3 months across the four counties, and that's definitely higher than it was at this time last year. So that means the market is cooler than it was at this time last year. On the other hand, it's still well below 2019 levels. So that means that the market is still quite a bit hotter than it was in 2019. So what this tells me is that, again, we're not headed toward like a big crash in real estate prices right now, because we're still pretty firmly in seller's market territory in terms of months of inventory. But if we see that number start to rise sharply 1 month after the other, then that would tell us that we're headed toward a bigger decline in prices. So just watch that in the coming months. I know there's a lot going on in the news related to that. So what does all this mean? For sellers, I think it's important to just be aware to be more conservative in your pricing, because interest rates are still quite a bit higher than they were several months ago, which means that buyers can't afford possibly what your neighbor sold for, and that's just a function of monthly payments being significantly higher than they used to be. So if you're looking to make something happen more quickly and not sit on the market so long, pricing accurately is more important now than ever, and we can help you figure that out. On the buyer side of things, I think you're going to see more opportunities for being able to negotiate favorable terms. So that might mean getting some help from a seller with closing costs, getting help with repairs, or both. Might mean you have the opportunity to get an offer accepted with down payment assistance or something like that. So if you've been on the fence waiting for the market to cool down and be less crazy, now is the time to get organized for sure. For those of you who are not moving but own your homes, this is a good time if you're thinking about getting a home equity line of credit and using it maybe to build an additional dwelling unit to help you generate some rental income out of your existing property. It's a pretty good time to do that, because appraised values are still going to be higher right now based on those recent comparable sales that sold for high prices. And it's probably the best situation for that we're going to have in the near future. So if you were considering that, this would be a good time to jump on it, and we can get you more information about that if you'd like. As always, if you have any questions about real estate at all, feel free to reach out. My cell phone number is 909-576-0695, and I look forward to connecting soon. Bye for now.